Hello and welcome to our first panel discussion of this year Blockchain for Europe Summit. My name is Agata Ferreira and I will moderate this panel. I'm a lawyer, advisor, scholar and university assistant professor focusing on legal and regulatory issues related to technology, fintech, and in particular blockchain and its development. I'm a UK qualified solicitor and I spent several years practicing law in London financial sector, in a leading law firm and in an investment bank. Currently, I'm an assistant professor at the Warsaw University of Technology and I'm a guest professor at a number of other universities in Europe. I'm also a member of an expert panel at the EU Blockchain Observatory and Forum and a member of Advisory Council at Blockchain for Europe, our host and organizer of today's summit. I'm very honored to be joined here in this panel session by our speaker, top professionals in blockchain space. So please welcome in alphabetical order, Julio Faura, CEO of Adhara, a company that builds advanced liquidity management, FX and payment solutions based on the concept of tokenization of money and leveraging smart contracts. Julio has spent 11 years in Santander, where he led R&D and the blockchain practice and held several corporate leadership roles. Prior to that, Julio worked at McKinsey & Company, where he advised many leading financial services firms in Europe and LATAM, and played a leadership role in the financial services practice. Julio was also a founding chairman of the EEA, the founding chairman of Alaska, a board member of WSBA, and co-founder of the USC project. Welcome, Julio. Next panelist, Etienne. Etienne Goffin, welcome, is a senior economist at Polybius, the maker of the financial application Awesome. Etienne was previously innovation consultant and economic advisor of the governor of the Central Bank of Malta. He advised both governments and fintechs on financial innovation, blockchain technology, and corporate financing for more than 10 years globally. I also would like to welcome Wojciech Kostrzewa, CEO of Bilon, a company that provides digital money and the enterprise-grade DLT. Wojciech is also deputy chairman and of the supervisory board of Ergo Hestia, an insurance company, member of the board of directors of Stadler Rail AG in Switzerland, member of supervisory board of Canal Plus in Poland. In the past, Wojciech was the CEO of ITI Holdings, the Polish media and entertainment group, and the CEO of Polish Development Bank and Brebank, currently mBank, one of the largest universal banking group in Poland. I also would like to welcome Anka Bogdana-Rusu. Anka focuses on policy and advocacy at CILO. She joined the team working on CILO after having spent over 8 years at the World Bank and the International Finance Corporation, focused on financial inclusion and fintech. Anka serves as an expert for the European Blockchain Observatory and Forum and as an executive committee member for Global Impact FinTech. And I would like to add that CILO is behind recently launched Euro reference stablecoin. Welcome, Anka. And finally, let me welcome Jürgen Schaaf, who is an advisor to the senior management of market infrastructure and payments at the European Central Bank since November 2019. Before that, he was the counselor to the executive board of the ECB and secretary of the Single Supervisory Mechanism project. Before he joined the ECB, he was personal advisor to the governor of the Central Bank of Luxembourg. So welcome, everybody. I'm really pleased and honored to have you here for this discussion. Before we dive into the discussion, and for those of you in the audience who are new to the topic of digital euro, some may ask, what are we talking about here? So some may say we already have digital money in our online bank accounts, on our credit cards, in our mobile financial applications. Digital currency including central bank digital currency, is a very wide topic. It encompasses many concepts and there are many possible models for implementing digital currency. However, for simplicity and for our discussion here, when we talk about digital euro, we talk about new form of money, token-based digital money. Unlike online bank account, where technology is used to improve existing processes within legacy banking systems, blockchain technology allows token-based digital money. money represented in a token that can be owned and transferred peer-to-peer on decentralized network without intermediary, much like cash in our physical dimension. Also, like cash transactions and unlike our traditional bank transactions with digital currency are immediately settled. So those digital tokens representing euro, in other words, digital euro, can be issued by the central bank. It is then called central bank digital currency, or CBDC for short, or it can be issued by private providers. Majority of central banks around the world, including the European Central Bank, are currently exploring or working on their own version of CBDC. So before discussing intermediary solutions for digital euro, what they are and what are the issues involved, I would like to ask Jürgen, who represents the European Central Bank here today, to briefly explain to the audience why do we need digital euro, what scenarios might increase the need for digital euro, and when can we expect our own digital euro issued by the ECB, and then we talk about intermediary solutions. Over to you, Jürgen.
Thank you very much, Agata. I hear an echo. If it's gone, fine. Thank you very much, Agata, for the kind introduction and the spot-on framing of the topic and what I will talk about. Indeed, before we talk about intermediate solution, we should have a common understanding what a digital euro is, what it is for, when it is supposed to come, if it comes. Now, let me start by dwelling a bit into what it is. Our understanding is that it is central bank money, so it is issued by the central bank. It is made available for citizens and firms in digital form, and its purpose is mainly payments. So this is very concise, but this definition is very important to keep in mind for all the things that follow, and also that is a kind of an underlying asset to any discussion that approaches the topic. The idea when we are dealing with it is that it's supposed to complement cash. It's not supposed to substitute cash. That's a very important element in all our reflections. It's also not supposed to replace wholesale central bank deposits, the other form of central bank liabilities that you're familiar with. Second important point is that the reflections and the discussions that are ongoing are aiming at synergies with the industries and the private sector, including the banks, and it's not our aim to replace them and to take away the deposits, for example, from commercial banks. And also, and that's an important element for the discussion for intermediate solutions, up to now, up to present, there was no need for a digital euro so far in the euro area. So with the payment services and the assets that we have right now, we're doing fine, but there might be scenarios in the future that might change this assessment. So there are basically two key scenarios to which we have to be prepared for. One is a secular trend in the usage of cash for payments. What we are seeing is that the amount of banknotes in circulation is still rising, also relative to GDP in the euro area, but that is mainly for hoarding, and we had a couple of smaller and bigger crises in the last 15 years or so. There's always the time when people tend to flee into cash and hold banknotes. But when you look at the point of sale, so transactions there, the role of banknotes is diminishing. And it's already clear now that with the pandemic, well, at the beginning, you had an increase in the demand for banknotes. Contactless payments in particular, so cashless payments have increased importance. And it's quite likely that this trend will not be returned, and it might even be accelerated. So there is a trend of cash usage going down, and in order to still supply central bank liabilities, one option would be to come up with a digital euro. The second element in this discussion and the scenarios that we have to be prepared for is more a political one. Now, we see, at least theoretically, the scenarios that big private companies, internet giants or so, could relatively quickly establish a private currency globally. It could undermine the role of the monetary sovereignty of a currency area like the euro area. Also, potentially huge global foreign CBDC could undermine this monetary sovereignty. So with regulation and technical challenges, this hasn't happened so far, and it's not really in front of our doors. But as a central bank and as a currency union, you have to be prepared and you have to make sure that you keep your financial and monetary autonomy as a currency union. Now, just quickly, an explanation and a definition and distinction to other things that are normally discussed about. What is a central bank digital euro? What is a CBDC compared to other forms of payment? So what helps is the definition and the concept of a liability. So we basically know three kinds of liabilities when we include CBDCs already of a central bank. It's first cash. So the banknotes that you have are physical and they are available to the general public. That's the most important liability of the central bank. Then we have central bank deposits, normally held by banks. They are already digital, but the access is limited to a few counterparties. The CBDC or a digital euro would combine these elements and it would be a complement to the other two. So it would be a third form of liability of the ECB. Different from that is the commercial bank money that you're all familiar with. So your deposit at the bank, that's the liability of a private entity. That's, you have a claim then to that bank. So although we have the deposit insurances, there's still a difference in terms of credit risk and solvency, as the central bank cannot go bust. And the last element in this context is the crypto assets like Bitcoin and others. They are no liabilities. So you don't have a claim effectively, legally, or even economically to anybody unless there's agreement to give you something in return. That's a major difference between the other two forms. And of course, there is this credit risk difference between commercial bank money and central bank money. With that, in the blockchain discussion, one thing that is important, our reflections at the ECB are basically technologically indifferent. Now, blockchain is an option in our experiments, in our conceptual reflections, but it's not a given. So there are various forms that can be approached. One of them is a blockchain solution. Others are account-based. And of course, you could think of combining the two. Now, talking about the timeline, which is of course also very important for the discussion that will follow suit, is that basically all major central banks in the world are currently conceptually reflecting and also experimenting with some sort of CBDC. So 90% of all central banks are somehow dealing with it. 40% of the global central banks are already experimenting with it. The ECB is one of the more advanced ones, although the Central Bank of China is leading the pack. But what I can tell you is that from the past, we have published a report available on our website, by the way, in October last year, with quite a deep diving reflection on concepts of CBDC and the digital euro, followed by public consultation, basically open to everybody who wanted to answer our questionnaire, reaching a record high 8,000 responses by citizens, firms, banks, associations, and the like. There we collected a lot of intelligence already without being representative. That has been concluded in January this year, mid-January, and we've published the report in mid-April with all those results. Now, we are very close to a decision by the ECB's decision-making body, the Governing Council. So before the summer recess, there will be a decision whether the ECB and the Euro system will enter a project. That means we're going to define, if that decision is positive, a budget, an envelope, a number of people we need to hire to enter an official project, which is open in terms of the outcome, whether or not CBDC, a digital euro, should be introduced, and also some experimental work that gives us answers on how a minimum viable product could look like. So that's in case the Governing Council decides to enter the project in coming weeks. It would take some 2 years, and that would follow by a more concrete experimental phase, so that if all those decisions in the nearer future are positive, we could think of the introduction in about roughly 5 years from now. So that's about the timetable. So with that schedule, I give back to you, Agatha, and I'm sure we're gonna go back to a couple of questions later.
Thank you very much, Jürgen, for this introduction. We will surely go back to some of the issues you have mentioned about stability of monetary sovereignty, about liabilities, etc. But I would like to start with and refer to something you have said, which you have said briefly, that we don't need, or it doesn't look like we do need, the digital euro right now. So with that reflection, I would like to refer to my panelists and start from Julio. Do you agree with that, or what is your observation about whether we do or do not need digital euro?
Okay, thank you, and hi everybody. It's a pleasure to be here. I think the answer to the question, I mean, really what makes a digital euro better is I mean, for me at least, it's about accessibility. About 97% of the money is commercial bank money. So a first observation I would have, or a first question I would have is, what happens if we make commercial money tokenized, right? So because, you know, commercial money is already digital. The only thing is that it only lives in closed systems, so the banks, right? So whenever we want to do something with digital money, we have to go through the banks, through their APIs, through banking systems, which have not been designed. They have not been designed to be interactive, right? They have been designed to be very secure. And actually, I'm very happy it is like that, right? Because it's my money. You see, I mean, it's our money and it has to be really, really safe, right? And really secure. So my question is, okay, if we tokenize that money, right? So if we create technology that can create money on tokenized form, which is the same digital money that commercial banks are creating today. It's just that instead of using a closed system, you are using a smart contract on top of a decentralized ledger. That doesn't mean that you open it up, you know, so it's completely controlled. It's, you know, it's the same thing. Regulatory, from a regulatory point of view, it's just the same thing. It's only that you make it programmable, right? And you make it more accessible using another security model. In this case, you know, public key cryptography, which is the same security model you use in cryptocurrencies and all that. So my question is, okay, if we create that, are we solving all the problems we see, right? Is that good for promoting innovation? And is this more efficient, right, than you know, the situation we have today, when, you know, whenever we want to do new business, new payments applications or things like that, we have to interface a lot of very different banking systems, right? So if the answer is yes, then I'm not sure what cryptocurrency or what a digital euro would bring, right? Because if the point is about accessibility and the point is about creating programmable money, let's say, I think, you know, maybe this is good enough. You see, I mean, it's about that, right? The main question I would have for digital euros is, what would be the role for the banks in that case? You see, because if 90%, 97% of the money today is at the banks, the system has been designed like that. So banks have all the responsibility to do KYC and to control all the last mile, let's say, with the clients, right? And if this were going to be replacing some of that, if the digital euro were to replace something like that, then it creates a completely new situation. And I know Jürgen was saying that it's not designed to replace, so which I appreciate, right? It's just that I don't know what the implications would be. So just to summarize, the observation would be, I think tokenized money issued by banks could be an interesting thing to explore in addition to digital euros, right?
Thank you very much, Julio. So I would like to move to Anka now, and from the point of view of financial inclusion, on which you're working on the Silo Foundation, and you have recently launched the Euro reference stablecoin. What do you think? Do you think we need that intermediary solution? So digital euro solution before Euro CBDC becomes a reality. We have just heard it probably within the next 5 years, perhaps. The decision hasn't been made yet. So what is your view on that? Do we need an intermediary solution in between?
Thank you, Agata, for the question. And I think the answer is absolutely yes. I would go as far as disagreeing that the payment systems that we have in Europe are working just fine. And to give just a very personal example, having lived in different countries in Europe, it is always a hassle to prove your credit worthiness once again in a different community. Thing that on the blockchain, your transaction history would be able to provide, opening a new bank account and going through all of that hassle. And so I would argue from that perspective that a digital euro, it's actually due probably 10 years ago when I needed it first. But speaking even further from just a broader perspective, right? Silo Foundation is working with members in 150 countries. And a lot of them are based in the US. We see so much in terms of stable coins pegged to the US dollar. And that has really driven a rise in DeFi application, in business models, in projects that are really harnessing innovation. If I can go back to the keynote address earlier, innovation is being aided by the ability to have stable coins and digital dollar in different forms. If we're being realistic, Europe is lagging behind on that. Europe is lagging behind on the amount of investment that is being poured into blockchain, into the number of startups that are building here. And that is a big area where a digital euro is needed. I would argue a digital euro, based on blockchain, but that is obviously a conversation up for discussion. And so if we're looking both at companies, at citizens, as well as the overall financial and technology industry, there's a gap there that is not allowing for the industry to thrive the way that it could. If we're looking where things could be 5 years from now, it's almost impossible to predict. I like to refer back to how the world fairs would happen in the late 19th century and early 20th century, and people would be asked about their provision for the future. And everybody imagined cities on the moon. Nobody imagined the internet. Nobody imagined smartphones. I think in the age of blockchain and technology, it is very hard to imagine where the industry will be in 5 years. And to not be able to compete at a global level, if you're based in Europe, if you're looking to remit and transact with euros, it's a huge gap that I don't know how one would catch up with.
Thank you very much, Anka. Thank you for this perspective. I would like to ask Wojtek here as well. You are working with institutional clients, so maybe you can share your perspective on what is the demand for this digital euro, this intermediary solution. Is there a lack, do you hear from your clients, lack of digital euro for the business use cases and new business models that they are trying to develop based on DLT? You're muted.
Yes, I'm back. Thank you, Agata, and welcome everybody. But before I will answer your question, just a few comments to the previous speakers. I wouldn't be so pessimistic about Europe compared to US, because being a former banker, and I hope that Julio would agree with me, the European payment system is really efficient, and normally you don't have any problem to settle any payments overnight or even within 12 or 6 hours, which seems to be the problem in US. Second comment is to Jürgen. Digital euro. I think that I'm belonging to that generation which remembers how euro emerged and what was the reason for introduction of euro. It was political decision to keep Europe as continent stable after German unification. And I think that this is exactly what will be needed to introduce digital euro. It will be needed a bold political decision taken not only by the ECB directors, but probably by the government of the leading Eurozone countries to go that route. And last comment to the role of the industry. Of course, like with Europe, political decision is not sufficient. You do need to have a support from the industry, from the business community, and that will happen only if the business community will see advantage. And the only advantage I can see, being in the middle of this debate and in the middle of the business process, is the cost saving. And I think that the cost side of the equation is the most powerful one. Cost side which starts with those who are transacting millions of transactions per day or per week, where even fractional costs are playing huge difference to the overall bill. Or if you do a lot of payments which are small payments, which are normally very expensive to be processed by the traditional banking infrastructure, which has the legacy, which was not prepared to transact this type of payments. And from the point of view of Billon Group, we started issuing regulated digital cash, the blockchain-based British pounds, back in the 2017. We are now issuing both Polish zloty and euro, based on Polish e-money license in Poland. And our commercial clients are those who appreciate the cost efficiency and also the speed of the transaction. And I could only add that the next step will be a system which will offer payment against delivery, eliminating one imminent risk in trading securities and in exchanging goods, which is also something which may lead to enormous cost efficiencies.
Thank you very much for this. So you mentioned several advantages of digital euro intermediary, digital euro solution as cost saving and for micropayments and high volume transactions and reducing counterparty risk. So thank you very much for that. And Etienne, over to you. After you've heard all the different perspectives, what is your view on why do we need intermediary solution before the 5-year waiting period expires?
Yes, and first I will answer to this debates of my previous panelists on the efficiency of the Euro system payment system, and in fact the needs of euro, digital euro is pressing. We see it, for instance, if you just look at e-commerce, you don't use cash in the e-commerce space. And the reason why is that there is no viable solution to use cash electronically. The only option is to rely on a private solution from banks. And this need is even more pressing for the token economics that go one step further than e-commerce. So I would argue that the need is very much there to have an alternative to what's available right there. The other preliminary comments that I would make is on the fact that digital euro is not meant to be a replacement for cash. It's just an alternative. But by being an alternative, it will replace cash for some use cases. That's the first element. And the second one is that this cash, be it electronically or digital, it has, I mean, it shouldn't be too convenient to safeguard financial stability and the effective transmission of monetary policy. If people start to hoard digital euro, this could create large shift from bank deposits, and it would be a big problem. So there will be for sure some measure to control digital euro holdings and make sure that there are disincentive to that sort of behavior. And in fact, that sort of things already took place. For instance, when the ECB stopped issuing the 500 euro notes, it was a disincentive to hold cash in 500 euro notes. It's more difficult and more costly to do so in 200 euro notes. So we have seen in the past that the ECB took some measure to make it more difficult to use cash, and I don't think the picture would be completely different with digital euros. Yes, I was seeing Jürgen Schaaf from the ECB showing no, so I will probably let him reply straight to my comment here.
Thank you very much, Etienne. And I actually wanted to go back to Jürgen now that everybody hasn't had an opportunity to speak, and we heard that there is a demand for that digital euro for financial inclusion, for some business cases. We've heard what are the opportunities and potential advantages. So let's just assume we have settled that. We need an intermediary solution. So Jürgen, if I were to ask you to respond to the speakers before, and to also, if you were to recommend something for those use cases and needs that have been highlighted, what would you say that this intermediary solution could look like or should look like? I know you have spoken a lot about liabilities and about monetary sovereignty. So given that there is this demand, what would be your recommendation, and how would you like to see this 5-year period working with this intermediary solution?
Thank you very much, Agatha. And let me address a couple of things that have been mentioned by the other panelists. And let me start because Etienne saw that I was heavily nodding. The issue with the 500 euro banknote. It is true that the 500 euro banknote is not issued anymore, but it has kept its status as legal tender. It's still to be accepted. So people can still use it. The problem is that it has lost basically its usage as a means of payment. No one basically can, if you want to go to a shop and you want to pay with a 500 euro banknote, forget about it. It's pretty hard to find someone. This, and likewise the 200 banknote, this is kept for saving and hoarding. We are talking now about payments. And of course, if a digital euro is to be introduced, it would have an impact on the amount of cash that is circulating. But that is not so much the issue, because the amounts that we are talking about here is far below 10% of the money being used, as already mentioned by other panelists already. So the more challenging question is whether this could affect the banking sector, leading to a depletion or a move away from the banking deposits, the most important means of refinancing banks, to our balance sheet. This is by no means intended. We're talking about payments. We are not talking about the creation, allocation of credit and loans. So that goes far beyond the technological possibilities. This is a conceptual reflection which we do not challenge. So we believe that the banks are much better placed as a decentralized way of offering credit. Likewise, capital markets with the issuance of bonds. The ECB is not intending to replace this mechanism, and that has nothing to do with the technological form with which people pay. So, and there are various ways to take care of that. So we described that already publicly, that you could think of a lid on the amount of digital euro that a citizen can hold. We have this example of 3,000 euros in a couple of publications already mentioned, not fixed, but that could be an option. You could disincentivize people and also companies, if you will, to hold not more than a certain amount of digital euro. You could make it less attractive if you exceed a certain threshold, and if push comes to shove, you could always put a lid on that amount. So we are fully aware of the role of the banks and the capital markets. For other reasons, we are not aiming to replace them. Mm-hmm. What Wojtek said, on the political dimension, this is so wise, but it's so apparent to me that I didn't mention it myself. But of course, this challenge has an order of magnitude, and it touches on many political areas, that it will not be the technocrats of the ECB alone that take such a decision. So I could not agree more with Wojtek, what he said about the tradition of the euro area and the cohesion within Europe, and that money, the euro, is a very strong, so far tangible symbol of that European spirit. And if it's digital, it's just a different form there. And last but not least, going back to the first panelist, the tokenized option is one option, but the sole reflections are not driven by our recognition of the fact that we need to do something with blockchain, or that we need to tokenize anything. This is one option, and it's by no means clear that this will be the outcome of our further reflection. So the blockchain community has many ideas, and the community is so innovative, very promising, but it's not that, and for some of them, of course, for Hammer, everything looks like a nail, but there will be developments, innovations that will do without blockchain. So it's an option, it needs to be assessed, but for a central bank, the monetary sovereignty, the safety, the impact on financial stability, the stability of the monetary policy transmission, that's far more important. So, and that's also one of the reasons why it takes time. And in the interim, of course, we have complete trust in the innovative power of the private sector to come up with interim solutions. And if the need and the pressure increases to speed up, we could also certainly do so.
Thank you very much, Jürgen. So thank you for this perspective from the European Central Bank. It's obviously important to look at your mandate to maintain stability and monetary sovereignty. And that's your financial stability. That's your main focus. But I would like to ask Julio, if I may, given our discussion and how it's progressing, do you see any potential issues and concerns with intermediary solutions? Do you think that there are more advantages or disadvantages at pressing ahead with intermediary solutions to address those various business cases and use cases that have been mentioned here before: micropayments, high volume payments, financial inclusion, cost saving, counterparty risk reduction?
Yeah. So again, I think what is important to clarify is what is the purpose, right? What is really that we're trying to solve? I mean, why is this better versus what we have, right? Because we tend to mix up a little bit the debate, right? We talk about the implications of monetary policy at the same time we talk about the efficiency gains versus the possibility to foster innovation, right? And there are different things you see, and different solutions may be useful for different things. One observation is that so you know, we have to agree what is the purpose for this, right? I mean, if the purpose is creating something that is more accessible and is programmable, and therefore can be used in more innovative ways, right? Then yes, I mean, digital euro can be a solution. Any tokenized form of commercial money or electronic electronic money licenses, as Wouter was saying. I mean, that is, you know, we already have regulation for that. The nice thing about that is that we can explore all the benefits of digital money. And when I say digital money, it doesn't have to be blockchain, but the point is something you can access in a programmable fashion, right, without having to go through the APIs of a single entity of confidence, let's say, right? That doesn't have to be blockchain or any type of blockchain. The point is making it accessible versus what we have today, which is systems that are run by banks or electronic money entities that already have digital forms of money, but kept in their systems, right? So I think that is that's important. I think there are many ways to explore that without having to risk or take the risk of messing up with, you know, the monetary policy and all that, as Jürgen was saying, which obviously is a very, very big thing, right? In some other cases, right, in some other CBDCs or some other digital currencies like China and so on, the purpose is a little bit different, right? The purpose is more about control, right? Whenever cash is really a problem, and you know, you were talking about the 500 euros note. Here in Spain, we used to have about half of the 500 euros note, and people used it in order to buy houses. Right? At some point in Spain, they build more houses every year than in Germany, Italy, and the UK together, right? And there was a lot of use of the 500 notes essentially to avoid taxes, right? So if we want to create new things for that, you know, that doesn't seem to be a very good idea, right? So in other words, I mean, if we want to create digital versions of money that can replace cash for the purpose of having better control to avoid tax evasion and things like that, I think that is good. But my observation would be, or my advice would be, to do it in a way that we don't change the way banks work. Right, because most of the bank is at banks, and it is issued by banks because we need the control and the counterterrorism measures and anti-money laundering and all these things, right? I mean, if you create, or if we create an instrument that is digital and is wonderful, but it's difficult to control from AML is not going to work. Or if the central bank actually has to do all the heavy lifting of doing all the AML and KYC and all that, that again is not going to work. And obviously that's not the idea. I mean, Jürgen was very clear about that. I mean, they don't want to replace the bank, right? But you know, that's definitely a little bit of a of a concern, I would say. So you know, I think again, I mean, and going back to my previous point, I think in general, if what we want is to have better or you know, more digital versions, more accessible versions of digital money, so we can innovate better, but always keeping the you know, the same infrastructure we have in terms of monetary policy, and also under the correct levels of control and anti-money laundering controls and all these things. My observation is that it seems better as a first intermediary step, if you want, right, to use the regulatory regimes we already have, which is electronic money and banking law, in order to produce digital versions of that, right? And maybe long-term, obviously, things can change. And we're talking a lot about retail CBDCs, right, or retail digital currencies, because of course the wholesale world is completely different, and actually that is progressing very, very quickly, as you all know, right? But we're not talking about that right now.
Thank you very much, Julio. I'm looking at Anka here, and I wanted to refer to you and then to Etienne, if I may, because how do you respond to that concern and that drive to maintain the existing status quo financial system, and to have you know, to have this new solution coming out of the banks and within the existing infrastructure? What would you say to that, Anka? Do you agree with that? Because you, on behalf of Silo Foundation, you kind of spread that financial inclusion around the world in different shapes and forms. How would you see that in Europe? Do you share the same concern about monetary sovereignty and disruption of the financial system?
Thank you, Agata. I think that's an interesting concern. At the rise of you know, fintech 12 years ago, everybody was worried that banks will disappear. I think that what we found is that as big and conservative as they may be perceived, what they ended up doing was integrating innovation in their way of doing business, as opposed to you know, live in a siloed, non-digital world. So I'm a little less concerned about the current banking sector. And I do think that, Jürgen said it, very few, if any, central banks who are looking at central bank digital currency actually look at a centralized distribution, issuance and distribution model. They are looking to utilize the existing players in the financial sector as for distributing the funds and playing different roles in the system. There would be different roles because the technology is different, but very similar to the way that they exist nowadays. And I think there's a number of good papers out there, whether it's from the IMF or frankly from my colleague Ezekiel on shaping the future of digital currencies, on how that flow of funds can be designed. One thing that I would do want to push back on the hammers metaphor is Fabio Panetta did come out with a list of what are the things that matter to citizens after, and the industry after the consultation for the digital euro. And if we look down the list, from privacy to anti-money laundering to the security of it to the ability to enable easy cross-border payments, it is very easy to, it's very hard, pardon me, to see how another type of technology would be able to ensure all of that. To the anti-money laundering point, I actually think, and I'm not alone in this, cash is the easiest way to launder funds. Cash is the only one that is not private, but it is anonymous. And I think there's a fantastic example of what's going on in the blockchain industry. Just the other day when the FBI announced that less than 2 weeks after the Coastal Pipeline ransomware payment, With blockchain analytics, they were able not only to identify the entire flow of funds, identify the wallet, and seize back a large percentage, I think it's 80 or 90% of the funds that had been paid with ransomware. Had this happened through cash, those funds would never have been back. Had this happened through the existing financial system, it would have taken months, if not more, to do so. So I think there's a counter argument that with blockchain, the traceability and transparency of it can actually empower, rather than act as concerns. One last thing that I want to add is the digital euro plays a role outside Europe. The Cello euro was not launched on the network because an individual or one entity thought it would be cool to do it. It was launched through community proposals from countries whose currency either hold a soft peg to the euro or are receiving remittances, large percent of their remittances in euros, and we're looking for a solution to address some of the gaps in the existing system. And so I think a lot of the focus should be there as well. Thank you.
Thank you very much, Anka. I know that Etienne was eager to add here to this trail of thought. And my question to you, Etienne, is are you more concerned about the financial stability, or do you see more opportunities like Anka has just mentioned? Where do you stand on that?
I understand the financial stability issue, and that is not the point to put that into question. It's a priority. But of course, I will speak as a representative of a fintech that also operate in the crypto sector. And our point is that status quo is not what we are looking for. Banks will not be able to continue business as usual. They already started to transform, and they will continue to transform. And the objective of financial stability issue should not be confused with standstill. So this innovation is moving well, and our objective is with Digital Euro is to foster this innovation, to accelerate it, to accommodate new use cases. A bank cannot be a solution to everything, and we see a dire need to integrate fintechs and the crypto sectors even more to normalize crypto asset class. And at the moment, this integration of the crypto sector with the traditional sector is difficult, and it creates a lot of negative effects. You see a lot of volatility and so on. And the more you will integrate it, the more you will normalize it, the more those negative effects should decrease or even disappear. So for us, the current situation is that dollars is stronger in the cryptosphere, and we think that it's an issue. It's give a big role to the US, and even degrees of extraterritoriality in transaction taking place in Europe. Mm-hmm. So that's for all those elements that we are, pleading for innovation, integration, and we realize, and everyone around the table here, I think, realize that it will change our daily works and change the daily business of the banking sector as well. And to conclude, I would just want to say here, this, topic is quite familiar for the experts that we are, but as Wojtek said at the beginning, it's a big democratic and political issue that will have a strong paradigm shift and impact on the life of European citizens. And we saw that the ECB carried out a public consultation. There was participation of the citizens in majority, but there was a strong bias. It was mostly, if I simplified, German millennials working in the tech sector. I would even say German males working in the tech sector. And we see that for the rest, digital euro, it's almost not a topic. People don't know or don't care. And given all the implications that it has for us, I think that is probably the biggest reason why it will take time before there is a shift to digital euro to ensure a strong adoption and understanding of the citizen and the social communities rather than technological constraints.
Mm-hmm. Thank you very much, Etienne, for this. Wojtek, over to you. I think I wanted to ask you, because you kind of stand between the traditional banking sector, and now you here on behalf of this new fintech company that is issuing tokenized money. So are you more concerned about disrupting existing financial sector or status quo? And Etienne was saying this: we're not looking for the status quo, and the banks cannot continue working as they have been until now. Or are you also calling for more innovation and for drive to develop these new solutions, as Etienne was also saying? Where are you on that?
Well, I think that since inception of Bidon Group, we were always following a cooperative approach. We do believe, and I do believe, taking my personal background, that the opportunity is in cooperation and not in the way to distort and destroy the banking system. Banking system is facing huge challenges, also on the income side, because providing payment services was always important element of the profit and loss account of every bank. With digital euro, with central bank digital currency, with the increase of peer-to-peer payments, this part of the income stream will fall apart. And it is a good question how the banks, which have infrastructure burdened with the legacy, some elements of the IT infrastructure in many banks are like 30 or 40 years old, how they may adapt to the new situation. But I think that two important tasks will stay with the banks, which is deposit taking and risk assessment. In other words, lending. For us as a challenger, as a blockchain-based e-money provider, there is a chance to cooperate with the banks and introduce solutions which will lower the cost base and which will, on the other hand side, compete with the banks in the field of peer-to-peer payment. Because I think that this is the most striking change which all of us will experience is this increase in peer-to-peer payments. And last but not least, those of us fintech representatives who will manage to solve the problem of the privacy while using the digital cash, they will be the winner. We believe as Bidon that we have the solution, but the privacy is the most difficult obstacle in wide adoption of digital cash and central bank digital currencies once they will start to be used by normal consumer, normal citizen.
Thank you very much for this perspective. So if I may go back to Jürgen, we have now heard the wide scope of perspective on how to go forward, from collaborative approaches to disrupting the status quo to maintaining the status quo. So you have wide spectrum of views. But I would like to ask you a question, going back a little bit to what Anka was saying earlier about a rise of stable coins that are pegged to euro, to US dollar. The market cap for stablecoins has now exceeded 100 billion, and over 90% of that is pegged to the US dollar, which kind of seamlessly allows dollarization spread of the US dollar around the world. Do you see any? Do you have any concerns about that? Given that this will rise obviously, and the dominance of euro-backed stablecoins will also increase and maintain. Do you see any concern that euro is not there and it's like insignificant in this stablecoin world? Do you see any concerns? Do you see there's an opportunity perhaps there to do the same with the euro, to use this innovation to spread the euro around the world in the meantime, whilst you are developing the CBDC solution?
Thank you, Agata. There are two things to distinguish. The investments that we currently see in some new form of assets are not necessarily the same or to be compared to a currency that should be used for payments. My bell is ringing. So you have a new speculative asset class here and there, a couple of assets you can invest in, and then we have the currency perspective for retail payments. Retail payments in general are not don't play the major role in determining the international role of a currency. Other factors are much more important, like the size and the dynamics, the growth of an economy and the underlying currency, the depth and liquidity of capital markets of that very currency, and payments and the redomination of that payment plays actually a minor role. Having said that, if you would come up with a global payment system that is not controlled or managed by the respective central bank, that is a political worry that we have. But again, you have to distinguish the asset function of new speculative investment classes and the currency function and the payment function that we are currently talking about. And on privacy, maybe one word. Technically, a lot of things are feasible and you don't need to have tokens for that. And so the level of privacy that you grant depends on the will. The technical means are quite rich. We tested already 2 or 3 years together with the Bank of Japan a moving level of privacy that you can grant. And privacy does not necessarily mean full anonymity. So as Julio said, the experience of Spain with that houses were bought with huge amounts, bags with 500 euro banknotes. That's of course not a role model. And we see legislation targeting anti-money laundering and illicit activities to now come up with a solution to avoid these legislations. That's not the idea. But what is helpful in that respect, that the central bank, without a motivation to maximize profits, neither to have the motivation to analyze your purchasing patterns, your private data and the like, and to make profit out of that. So if your data is in the hands of such an institution, might be a bit more comfortable than having the idea that an internet giant is doing that with a particular interest on your data, your purchasing patterns and the like. So privacy is not equal to 100% anonymity. It's higher than what you have in other means of payments, but it's unlikely that it would undermine the legislation that we have.
Thank you very much, Jürgen. Thank you for this. This is such a broad topic and there are so many different things we can discuss. Unfortunately, we're running out of time. So I wanted to give an opportunity to our panelists to kind of close with some remarks. And my question here is, first to Julio and to the other panelists as well. Do you think we are fast enough in Europe with developing intermediary solution? Where does it put Europe in the context, in the global context? How do you see Europe developing its new form of money, given that we can only expect CBDC in about 5 years? So we only have a few minutes, and over to you, Julio.
Okay. We are fast enough. I don't think we're slow, frankly. I think this is a very important subject that needs a very careful consideration. I think European banks are reasonably innovative when it comes to this subject, or electronic money entities. We do have very good electronic money regulation, which is the perfect way to do experiments, frankly. I mean, so in terms of intermediary solutions, that's why I'm so much in favor, because you can't see it, and then you can see what to do once that fails or not. You see, the last thing I wanted to say, because I think in Europe, I mean, many of the things that apply to like stable coins and crypto and all that don't apply the same in Europe, because the situation of the economy is completely different, right? Stable coins, for example, in Latin America, that's a big thing, right? When your central bank has a very bad currency and you just don't have any faith in that system, then you're happy using a stable coin solution issued by a company that is not regulated, because you see, I mean, you have no other alternative. But that's not the case in Europe, right? In Europe, we do have a central bank, we have a strong currency, we have all the controls. So, and the system works, as Wojtek was saying before. I mean, the payments world works, right? Everything can be better, of course, but you cannot compare the situation here to other places, right? And financial inclusion, in the US, about 1/3 of the households are not banked, right? Because it's very expensive, and it's not. But that's not the case in Europe. I mean, here financial inclusion is definitely not a priority, or not such a big priority as in other parts of the world. So altogether, I think Europe is doing actually a quite good job, I think. And I think we'll have to focus our efforts in what we have to innovate upon, right? Which is the system we have better and more accessible.
Thank you very much, Julio. That's a very optimistic conclusion from you. Anka, what would you say to that? Are you equally optimistic? You already kind of hinted your view on that, but would you like to close with some remarks, concluding all this discussion? Do you think Europe is slow, fast, comfortable enough not to change it too much, too fast? What do you think?
Thank you, Agata. I will disagree a little bit that financial inclusion is not an issue in the European Union. The way that the World Bank defines financial inclusion refers to access, yes, but also usage and cost, and how appropriate in solving a certain financial needs the products and services are. And if we look back even a couple of years ago to a McKinsey report, the financing gap, both at household and company level in Europe, is a lot higher than one would expect. And so I would say there's still a lot to be done. I'm Romanian. If we look at Eastern Europe and some of the countries that are looking to become part of the EU, there it's even more of an issue. I think Europe could be faster. I am European. I identify as European. I am proud of being from Europe, and I would want to be able to brag about Europe being the center of innovation, not only in this industry, but a lot of others, and intermediary solutions that in the long term I'd see coexisting with what the ECB is prototyping and testing, are really important to expose people, again, who may not be part of the Eurozone, but part of the EU, to alternatives, and fire up the DeFi and FinTech industry in Europe.
Thank you very much, Anka. Etienne, do you agree? I suppose you probably shared Anka's view, but if you can please let us know, what do you think about the speed of the European innovation? And I also would like to refer with that question, because what you are Anka was saying was the investment gap, and indeed, I think it was a week ago that the report was issued by BIC and European Commission talking about 10 billion euro investment gap in blockchain and artificial intelligence. So perhaps that is also something that you're referring to. So Etienne, what do you think? Where do you stand on that?
I mean, too fast or too slow. I mean, it always depends. I mean, it's for every monetary policy move. For some people, it comes too fast. For others, it comes too slow. For every increase or decrease of interest rates, it's the same. And here it applies. So, but I mean, I think the private sector will not wait. So in that sense, we are too slow, and even the citizens are creative, even to an extent where we would want them to restrain themselves. If we think at the 500 euro notes in the context of the Spanish real estate sector, but we see that if people or some people think that the system is placed doesn't fit their needs or preference, they will find alternative ways to carry on. And I want us to remember that Bitcoin was actually started in the aftermath of the 2008 crisis. It's not just technological innovation, it was also philosophical innovation. It was a contest of central bank power. So understand that central bank and fiscal authorities want to ensure that monetary policies and AML and fiscal justice to proceed the way they intend to be, and they need to protect and even strengthen the firepowers to achieve that. But I think the philosophical belief of the people that started this nascent crypto ecosystem are equally important, and that you need a counterbalance of power always in a democracy. So these democratic aspects of digital euro and cryptocurrency are still important.
Thank you very much. So Wojtek, over to you. We're closing our panel now. So where do you stand? Because you mentioned in this discussion that our banking system works quite well, and you also representing Bilon. Would you like to see that innovation becoming a reality quicker? Would you like to see Europe kind of putting more effort into this innovation in diversity of solutions until we have our own CBDC?
Well, first of all, I couldn't agree more with Julio. Europe has a great regulation, which is the e-money directive, and set of legal rules which is related to it. This is great to innovate, to experiment, and what I could wish is more openness among the banks, because the fintech community is willing and ready to cooperate. Sometimes we hit the wall of lack of understanding among the banking community, but the future is in collaboration and not in the war between these two communities. And I could only wish that not only the banking community and the insurance community will show more openness, but also the lawmaker will stop to create another regulations, but allow first current regulation to work, because like every innovation and like every regulation, it needs time to adjust itself.
Thank you very much. Thank you very much to all the panelists for this discussion. I think the conclusion can be that there are many challenges ahead, many points of view, and a wide spectrum of interests that we have to agree on. So there is exciting times ahead. I wish all of you good luck in your pursuits, commercial and professional pursuits. I hope we get to discuss this topic more in the future. But for today, thank you very much for your participation, for this discussion, and over to Blockchain for Europe.